All right, we'll go right to item 10, conduct of business. Item A is received a quarterly financial update report as of December 31st, 2012, and adopt a resolution approving a mid-year amendment to the 2012-13 General Fund, Enterprise Fund, Internal Service Fund, and Special Revenue Funds operating budget. Kim?
See it very well. All right. Good evening, Honorable Mayor, members of the City Council. I am here tonight to present to you the quarterly financial update report as of December 31st, 2012, as well as a mid-year proposed budget amendment. The second quarter financial update you will typically see, as opposed to the first quarter financial update, you will see revenues starting to catch up as far as timing. Many of our revenues are still timing about a month behind, but you will see that we are starting to near that 50% point. So moving right into the revenues, I'd like to highlight what I think is positive news that I delivered with the first quarter financial update. Starting with sales tax, we are continuing to see an increase in sales tax. Can you see? I apologize, it's not very clear up there. Lesson learned, next time I'll use white. So sales tax, you might recall, we increased the budget for sales tax by $100,000 this year, and the revenues so far year to date are tracking slightly above budget. So we do anticipate that sales tax will not only meet budget, but will exceed the current budget of $6.7 million at the end of the year. Property tax, we are currently at 51%. This is typical for this time of year. We get our first installment of property tax in December, so that is what's reflected here. What is not reflected in this property tax number is the additional property tax that the city now receives as a result of the elimination of redevelopment. That money comes in a separate distribution. The first installment was received on January 2nd, and the next installment will be received June 1st. So that number is not reflected here. However, based on information that we've received and the amount we've received, we do anticipate that property tax overall will exceed the budget at the end of the year as a result of this new money coming in from the loss of redevelopment. VLF is tracking on course as we anticipated. Charges for services, you will see that as comparison to last year, there is a significant decline, and the reason for that is this is the account where we see the allocations that we used to recover from the redevelopment agency for general administration salaries and so forth. That was a revenue coming into the general fund. That is why the budget was dropped this year, was lost that redevelopment, and that is why that amount is less dollar for dollar last year. Another positive trend that we're seeing is continuing growth in the TOT, hotel motel occupancy tax. This amount only represents, that you see here, represents 5 months, not 6 months, because we do tend to track a month behind. So at this point in time, we are trending above budget, and we do anticipate that we will exceed the budget at year end in that category. And just finishing up on the revenue side, business taxes doing strong as well. We typically see that those are front-loaded the first half of the year because that's when people renew their business license. So the amounts that we're seeing there and the 82% is typical. Otherwise, everything is tracking as par with where we thought we'd see it, and overall total general fund revenues are at 49% as of December 31st. On the expenditure side, you will see that we are tracking slightly above budget, and that is the result of a number of different things. Primarily, you might recall that when we adopted the current year budget, we included the continuation of the negotiated furlough and due to the fact that we had the expiration of all 6 of our bargaining unit agreements on June 30th. We did not include the elimination of that furlough. We have since settled with 4 out of the 6 bargaining units. The furlough was eliminated, and therefore we're seeing that actual expenditures reflecting the elimination of that furlough, but the budget is not yet reflecting that. In addition, we had PERS increases, which are primarily driven by safety PERS increases, so you will see slightly higher trends in the safety departments as a result of those PERS increases. We also have less vacant positions this year than we had last year, so when you compare dollar-wise the prior year to this year, you will see that we are higher this year because we don't have the salary We are tracking higher dollar-wise due to the fact that we don't have the vacant positions and the salary savings that we had last year. And finally, if you look specifically at a certain department like planning and building, you will see that the expenditures year-to-date are higher than they were last year. And again, the recurring theme, this is another impact resulting from the loss of redevelopment. Last year at this point, redevelopment was still in existence. We were still able to allocate salaries of staff that were in the planning and building departments to redevelopment. That is no longer the case. We budgeted for that in the general fund, and that's why you see higher expenditures there. So overall, bottom line, total general fund expenditures were at 52%. However, I will add that there's a proposed budget amendment to increase the budget to account for the elimination of the furlough, along with some of the benefit increases that were agreed to as part of the negotiated agreements. If that budget amendment is adopted, the total expenditures will be at 50% of budget, so they will be tracking just on where we thought they should be. Moving to the enterprise funds, we see that the revenues in cable are tracking slightly below, but likewise so are the expenditures. So in cable, we are still seeing that revenues are exceeding the expenditures. In wastewater and water, you're seeing the revenues tracking along with what we expected to see as part of the rate increase. These amounts do reflect about 3 months of the increased rate that went into effect in September. And I would remind you, in looking at the expenditure side, it's a bit misleading because what this is showing you are operating costs. It does not include costs as part of the capital improvement program. And as you're aware, much of that rate increase is to cover costs of capital. So the excess revenue that this is showing is expected, and due to the fact that it's not including the capital on the expense side. And finally, on stormwater, nothing notable. It comes in with the property tax, and so we tend to see 50% at this time of year. So moving into the proposed mid-year budget amendment. On the revenue side, based on the information that we have at this point, the proposed budget amendment is to increase property tax as a result of the loss of redevelopment. The additional property tax that we believe we will receive this year is about $400,000. At this point in time, sales tax is trending above, and we anticipate that it will exceed the budget by $150,000. Likewise, transient occupancy tax, we are proposing to increase the budget $100,000 for a total increase in general fund revenues of $650,000. The next amendment is to the one-time fund for the recoveries that we discussed at the last meeting. We were receiving one-time money resulting from the loss of redevelopment. This is the former balances of the redevelopment and low and moderate income housing funds that the city is receiving. We estimate about $457,000, which has been earmarked for the archway construction. So this is a budget amendment for those revenues. And finally, an increase in the self-insurance fund due to an increase in the premium for our liability coverage, which I discussed, I believe, at the first quarter financial update report. That amount increased this year. The premium increased to $151,000, and therefore we want to increase the allocation into that fund to cover that additional expense. On the expenditure side, most of these proposed amendments are a reflection of the negotiated agreements with the 4 bargaining units that have settled at this point. The total increase to reflect the elimination of the furlough, the increase in medical insurance costs, increase in management leave buyout that was offered to the mid-management and management bargaining units, as well as the professional development increase for management employees for the general fund totals about $652,000. And for all other funds, it's about $570,000. In addition to those increases, the budget amendment includes to establish a budget for the purchase of the hotel property, as well as some of the professional services costs associated with that, in the amount of $1.416 million. And as I earlier mentioned on the revenue side, to increase the transfers in, also increase the expense for the self-insurance for the premium increase of $151,000. And finally, the last item is the item for the cost for the construction of the archway of $604,000. So that concludes my presentation. I'd be happy to answer any questions.
Any questions? Or action?
I'll introduce the resolution.
Vice Mayor O'Connell.
Aye.
Councilmember Medina.
Aye.
Councilmember Ibarra.
Aye.
Councilmember Salazar.
Aye.
Mayor Ruane.
Aye.